What's happening, guys? Welcome back to another Sunday Scan. Hope that everyone had a great week and weekend. There's lots to talk about as always, so I'll get into some charts, review some plays, some themes, some things that I'm watching in the market, and then later on, Stan's going to jump on. He's going to review some really good trades that he had over the past week and talk about just a lot of concepts that we use in Investors Underground, like the failed follow through, like a clear out move, like an all day fader, and key levels. A lot of things that are worth paying attention to and that are really the tools of professionals when they trade. So make sure that you stick around for those topics and more. So let's get right into it. I'm going to start off with SOUN, sound. And so the first one that I really want to go over with this was when you have these like kind of thematic names, like, related to AI, related to, some kind of theme or sector, and you have the names with options, those tend to be the ones that go further than you think. And we see this all the time. We saw this with SOUN. We saw it with like SMR, OKLO. We've seen it with like IONQ, RGTI, all these different names that are, leading these sector moves. They all have multiple things in common. They have a common theme. So they have money that is looking for places to go. You have a kind of a mid-cappy size name, maybe, smaller cap, but the smaller end of the mid cap range, so that you can have like funds get in and out. They're pretty liquid. And then you have options activity on them. So when you have all those things come together, it's no surprise when you see these names going pretty far, regardless of their fundamental value or anything like that. If you have a theme and you have a fund that wants to play it, they have limited options. And so that's how you get a lot of money flowing into these names. So you have things like SOUN, and we've talked about it before, AI, like some of these groupings together where they tend to run, when you have certain market themes in play. So a lot of people have been short biased on SOUN, and the fundamental case, everything like that, it all makes sense. But you just have to be aware that when the trend's in place and you have the options activity and all these other things confirming it, to not step in front, but rather wait for spots that have a good risk to reward and where you could see a big unwind happening. And a couple of things that we've seen over the past, week or probably 2 weeks with a name like this is, if you look on the options chain, I know that not everybody's an options trader, but even if you're not an options trader, it's worth paying attention to some of these things, at least pulling up the options chain on that. And that just shows all the puts and all the calls that are available on a stock. And especially with stocks that have high options activity, that can help you to gauge the range. You can see, where's the most activity happening on the call side of the options chain. And, last week it was around that 15 area for SOUN. And this week it was around that 17 area on the call side. So if you have a name that's kind of, grinding up, its bid, it's in a sector, it's in a theme, and you see the most active area, and that's a combination of volume and then also open interest, which open interest is delayed, but that's a separate topic. You're just trying to eyeball where is like the options market seeing as the big level. And so that can help you to anticipate the edge of that range. So, if you think a big unwind is coming and, that big level in the options market is around that 17 area, then you can wait until it kind of gets up to that before you maybe put on a trade if you're short biased or something, as opposed to, you see all those options at 17, building up, and you're at, 16 or 1630, and, the stock's grinding up, and, that's kind of where that upper edge of that range is, but you're, early in the short, kind of waiting for things to set up. So that's just something to keep in mind with some of these names. Pay attention to the options chain, look at the big key levels, and you can always ask, people in the room like myself or others who can give you some more insight into that in real time. So that's just something I want to cover with SOUN. And then also, wait for the market to have a change in tone before you expect a big unwind in these things. The market's good at finding equilibrium, or a point that, makes sense for the buyers and sellers that are in there based on all the information. So if you have like, an equilibrium point you kind of reached and it's building with positive news or whatever else, you need something in that narrative to kind of shift or to, change so the equilibrium changes. And then you have, some of the buyers take profits or, things like that step in. So the next one is AI, very similar kind of topic to that. And again, these aren't like the main watches section. This is more just recapping some quick trades and some moves and some stocks that have been moving. So kind of a similar theme and a similar idea to SOUN. These small to mid cap names that are in a sector and theme that have options and kind of a bullish market in general. The next thing I want to touch on is that this is a big upcoming week. We have the FOMC on Wednesday. They're going to make the next interest rate decision. It's being priced in, or it's expected that they're going to cut by basically a quarter of a percentage point. So 25 basis points, they're expected to do a cut. But we've had some hotter inflation data start to come back a little bit. So I wouldn't be surprised to say or to see from the Fed that they're like, okay, we're going to cut this time. But we saw some data that was not super great. And if we continue to see that, we're going to have to take a pause from cutting for a while. And that could cause, I think, a storm, as you have like political changes happening around the same time that could be happening. I think it could be like misinterpreted as having to do with politics, but I really think that if we start to see inflation start to trend back up, which happens in very bullish markets where a lot of money is flying around, then you could have a sticky situation with the Fed, and the market might have to reprice some forward cuts not getting priced in. So that could cause some market volatility. So, and then you can see this is just the 10-year interest rate, which is like the 10-year yield on the treasury bond or the treasury note. And you can see that as things kind of get priced in, you can see that yield rising. And usually when you have sharply rising yields, it has knock-on effects in things like IWM, which is very rate sensitive. So you can see a direct inverse correlation of when bond yields tend to spike and when some of these indices that are very rate sensitive tend to flush. So again, keep that in mind as the FOMC meeting is happening this upcoming week, because you could have, some further continuation where it's, if you have more spikes in bond yields, you could have more downside. Or if the Fed's like, we're just going to run things hot, we don't really care, which is, who knows what they'll say, but you could have a bullish market resume. APP, this is just one I wanted to cover really quickly because it covers a few different topics. So this is a name that ran for a while, and it was really anticipating being added into the S&P 500. You have all these different indices and these exchanges and everything else that have like their rules of when names get added into the index, when are they removed, and that's been a pretty active theme over the last couple of months with names being added and other names being taken out. So a lot of times what you've seen is a lot of these names will run in anticipation if they look like they're a candidate that could be added, and if they're kind of expected to, they will run into that event. And if they're not added, like this was not added to the S&P 500, then you can have these big unwinds, especially if you had a bunch of bullish option activity or the call activity on the way up and it's still there, and then something happens. All that has to unwind, and that can make for some really clean trends down. So we'll see as we get into some upcoming events. We'll see if maybe it finds some support here, or if it just has a much larger unwind, maybe back down to the the upper twos or the 270, 280 area. UNH, we talked about this last week, how I thought that there could be some more pressure on the stock for different reasons, not just because of the incident that happened with your executive, but because, that puts a spotlight on all these companies that have, business practices that are not super popular. And as you kind of have people dig in more, you can have more pressure and more potential policy changes on the horizon. So, you saw some more pressure in a name like this, and we're probably getting down to a point where if it has a further flush, maybe it'll bounce off that 500 level, or something, maybe the 480s or something, if that pressure stays on. But it's just kind of like a good example of when you have a theme or a topic or kind of like a setup where the public perception matters on certain stocks more than others. And when you have things that are directly related to policy, that's something to keep in mind in the future when you have a spotlight being shined on some of these names. The next name, RGTI, again, like we talked about with SOUN and some other ones, you have these names that are in a sector that are, small to mid cap, and then they have options on them, and, you have these big run ups. So this was a parabolic over the last week, and then you had big opportunities on the long side, big opportunities on the short side, and now it's kind of consolidating, trying to pick its next move. So this is with the quantum computing theme. It's been a very hot sector over the last 2 months. You've had some developments with Google, you've had some developments with the technology. And, something with this space is that the quantum theme has been around for a long time, but a lot of you only had a couple of the core companies that were still active. So maybe it's, 5 or 10 companies. And so if you have a lot of money trying to get exposure to that theme, it's not so much just about what are the merits of the particular company, but it's more the money just wants to find a place to go. And that's how you can have these big moves from $1, $2 up to 10. And that's pretty typical, honestly, with some of these strong theme trades. So this will be on watch. much, but this is again just kind of recapping the moves, not so much getting into a trade plan on it. But I think it's a good example, and it goes to show that however you're playing these and however you're trading these themes, there's opportunity on the long side and on the short side. You just have to pick your spots. And so, if someone's down here saying the quantum theme's going to go nuts and do whatever, it's like, okay, that's fine to have like that big, big picture view. And I do that as well. But along that way, there's plenty of spots where a short seller or someone who is in puts or other things could make, great money on some of these plays. So as a trader, you're not just looking for the overall theme, but you're looking for those pockets within the theme of where it sets up, where you have basically a positive reward to risk ratio, and you have the technicals and the kind of the fundamentals or the narrative on your side. So stocks set up many different ways over many different time periods. The next one, AVGO, this was on watch last week for upside. So this ended up working really well, and it had a huge gap up on earnings. They had a huge forward guidance up, and you've seen that a lot on these names in this market where they have good earnings, good revenue, good guidance, and they're just reacting really well to that. So that's pretty typical in more of like a bullish type of market where, again, that equilibrium of what they were trading at before based on all the facts, that changes, that shifts up because the guidance is better, the earnings are better, the revenue is better. So that new equilibrium hangs out up here for a while. And then the last one I wanted to go over just quickly is Tesla. So, we've talked about this name a lot since the election. It ended up having a really nice move out there, past all-time highs now. And it kind of reminds me of like the Palantir kind of setup where, a big run up back to former highs, it consolidates for a while and then just breaks through and, can go a lot further than people think. So again, big picture, I'm bullish on Tesla. I think it's going to move significantly higher over the coming months and everything. But there are plenty of setups along that way where it sets up long, it sets up short. And so, you can have a name that's in play, that's active on watch, and you just kind of pick your spots and, trade whatever preference that you have for it as long as it sets up. So, and this was another example of like in the options activity on, Fridays or Thursdays or other things, as long as it's not super overextended yet, as long as it's still kind of getting overextended, then that tends to be the times where you have like, those call walls like roll up. And so again, looking at like those key levels on the options chain. So for Tesla, it was at like 420 on, Wednesday and Thursday, and then start to roll up or people start to buy higher strikes, 430s, 435s, 440s. And, as that kind of like key area on the options chain is moving up, then the stock often moves up with that. And then next week we have options monthly expiration. So if you get some kind of major parabolic move into that, and the options get too expensive and everything, then you could have one of those big mean reversion trades. So just because I'm, have a bullish view on Tesla, there could be some of the best trades on, on puts or on other things along the way, but you just have to pick your spot. So those are the main things that I want to go over on the kind of the playback or the recap of the stocks that were in play over the past week. And now before I bring Stan on, I'll give the disclaimer that neither he nor I are financial advisors, and these are not buy or sell recommendations. All of this is for informational and educational purposes only. Now let's talk to Stan. All right, Stan, thanks for joining us back on Sunday Scan. Excited to talk with you, to catch up on your market thoughts, and just to go over everything.
Yeah, absolutely, Chris. Thanks for having me on again. It's always a pleasure to be on these sessions.
Yeah, definitely. So, very active week. Walk us through, you had some comments on general market liquidity. There's a ton of sectors moving. So just, what are your thoughts on the market as a whole right now? And then I know later on, we're going to get into some main watches and maybe even a trade review.
Yeah, absolutely. I mean, so far, Chris, the action continues to deliver opportunities on daily basis across several market structures. We have Tesla at all-time highs, and generally when Tesla runs, it brings a slew of liquidity that we're able to notice in various spaces. I mean, I think last week we saw an influx of flows into the small caps, which lit up several scanners, right? With moves like RGTI, AMPG, CADL, Duo, and many more. So hopefully the action remains in the space. However, as we approach the holidays, as we approach the year end, I think, you should be mindful of the volatility and keep your size in check. What you got away with last week may be a little bit more difficult to get away with this week, as you have liquidity start to tighten up a little bit, which may cause range to expand. But again, it makes it a different field of how you manage your risk exposure. So, I think so far we've seen great momentum into year end, and hopefully continues.
Yeah, and especially into year end, that's when a lot of new adjustments, new portfolio adjustments take place. You have sector rotation, you have separation between the strong names and the weak names in a sector. And so we have a bunch of examples and kind of things that we're going to cover. But I know that you had a really nice trade this past week on IONQ that kind of demonstrated a lot of those topics of the separation between the strong and the weak within a sector. And then it also just demonstrated a lot of the concepts that we use in Investors Underground with, failed follow through kind of setups, the clear out example, the all day faders, and a lot of things like that, zooming out on higher time frames, when it was breaking a trend line and now it's under resistance there. So if you could pull up your IONQ chart, I'd love for you to just talk us through that trade and a lot of your thoughts on it.
Yeah, sure, Chris. I'll start with just the main chart on IONQ because for me, the way I like to approach the market, a lot of the thesis is based more around higher time frame. It's based more around overall liquidity and where are congestion zones, where are levels of interest. So I don't necessarily get excited for the quick intraday movement. But as far as INQ, I believe I traded it on Thursday. It was this day right here. Let me just pull up the 1 minute. So the trade, it was this day right here, and the overall idea for the trade essentially came from this 3250s level being a key level as we saw it support throughout the move higher, and then during some of this slight distribution area here. But you see the 3250s show up as support here and over here, and then once it broke through under the 3250s on Wednesday, then when we saw the gap, or it kind of held and it opened flat out of the morning on Thursday, but then it immediately ramped up. So that put it on my radar essentially to watch versus this 3250s, and if and when we exhaust, then I have a trade. So the idea overall, I'm going to switch to the execution chart really quickly. The idea overall started with exhaustion parabolic into this 3250s level. And my thought process was, wait for the exhaustion, wait for some confirmation to see what is the congestion level look like above, what does the supply area look like above, do we still have that selling pressure? And then once it started failing, I started in versus 3250s. As it pulled back immediately, I covered some of that starter, and then essentially the parabolic exhaustion into a key level, a reactive trade, rolled right into a fail to follow through setup, which is fail to follow through 32s. We can see right here on the way up, you have that 32s breakthrough, slight consolidation, and then it does that final leg. It exhausts, comes back, it tries to stabilize on that, versus that 32s. This is the fail to follow through setup opportunity. We can, re-enter here, and then upon confirmation, the next covers were versus VWAP. That's something that I do often as we approach a big, obvious key level. I like to do an adjustment, and the adjustment could be, cover some, could be re-add some, similar to as we're seeing right afterwards. As now the fail to follow through works really nicely, we're actually shifting into a all-day fade type of setup. Yes, it didn't start out of the gate, but the time frame has simply shifted, right? So from that point forward, if you were to trade an all-day fade setup, this is kind of what it looks like out of the gate, right? It opens up, it does its thing, and then it just fails to follow through all day. So this essentially started with a reactive trade into a key level of resistance, which then rolled into fell to follow through setup, and then after VWAP confirmed, it essentially rolled into a all day fade. And this is the type of market that we're in right now. I think it requires you to be a different type of trader during a different segment of the overall trade. And if you fail to adapt, if you fail to adjust, then you could easily turn a really, really good trade. If you're not on the bid, if you're not on the offer, it goes flat to red almost immediately. You blink and it's gone. So in a way, it's what excites me about this existing market that we're in right now is the ability to look at the tool belt you have, look at the arsenal of opportunities and edges that you may have, and then start to apply a combination of one or two or the other. Or if you only have a certain thing on your playbook, then there's nothing wrong with sticking to that as well. But this was the IONQ trade on Thursday. Unfortunately, I missed this. I wasn't at the desk. I missed this rescale opportunity here versus the VWAP exhaustion, but a really, really clean opportunity overall.
Yeah. And it demonstrated so many different variables that we kind of look at in Investors Underground, where it's like that key level towards the top, that you were looking for exhaustion into. It's basically a key level if you zoom out on the daily chart. So like that's an important level that has been used to basically define the trend, and it can go from being more of a bullish trend to kind of a bearish trend if that is like the key point. And then waiting for it to really exhaust out. Like, what does that mean? That means that, everyone who's been in there, either long or shorts or anything, it's like everyone, like the chart kind of resets up at that key level. And so it makes for a really good reward to risk point where it's like, if it's kind of stalling out there, if it's giving it everything it has and it's still struggling with that really important level, that's a good level to kind of use as like, an area to risk off of, roughly, or an area near that. And then, if it does unwind, if it does fail, the range and like the next spots where it can go to are far away. And so, if you're wrong, you risk a little bit. If you're right, you get a lot of meat on that move. So, and then just, using kind of like the fail follow through concepts and all those other things to keep the trade on track. So like once you have a good risk to reward point up there, then you're looking for all the confirmation signs. And now it's like, it's a living trade that you're adjusting on the fly as you see, is this acting how I think it should act? Is it staying heavy? Is it going to the next target? And then just kind of adjusting it from there as it plays out. So really, really nice trade and a lot of good concepts there, Stan.
Yeah, thank you. Like I said, I think I'm going to switch back to my previous screen so then we can continue on with the watch list. But as mentioned, for some of the opportunities that we have in the market today, they require you to be there, and I mean to be on the bid, to be on the offer, to be already at where your expected target range is, because more than likely you're correct. Maybe your time frame is a little bit off, but if you're not there, it's so quick, right? There's these liquidity pockets where it's consolidating heavy and it's doing its thing, and then it just flushes and it rips right back up. And if you weren't there already, you missed the opportunity. So IONQ will actually remain on watch and is my one of my top watches for next week. So we can quickly go over the idea here. Essentially, now that if we're looking at it on a daily chart, now that we've put in some sort of a local top, if you would, versus this 36, 38 area up here, I'm interested on any of the pushes that it has throughout the move as it tries to decide, are we going to just firm up this trend over here that we're seeing sort of? Are we going to just firm up this trend and then continue on to 40s and 50s? Or are we going to recheck in with this 36, 38 local top and then fail to follow through? That essentially is what starts to guide overall my trade ideas and expectancies over the move. So on Monday, ideally, we see some sort of a gap up, maybe 35, maybe get into that 36s again, and then continue to fail to follow through from there. Ideally, find a similar opportunity, a similar setup as something as exhaustion into this 36 and a half level. I'll trade that with similar idea as I did last Thursday, and or if it is a slow grind, up a little bit, down a little bit, but in a overall grinding upwards fashion, then that's nothing to step in front of, right? That's something that you need to let it exhaust. You need to let it do its thing. So higher the better, ideally, gap up parabolic into 36, 30, 37s, etc. area, and then go from there. The next name that I have on watch is SOUN. So SOUN, it essentially digested this first move right here that we had. We were in this, once it broke out of this $10 range and it went higher into the 16s, then it pulled back a little bit for this past week. It essentially digested this first leg, and then on Friday we saw it break out of that 13 to 15 or so range. So this could be just the beginning of the second leg as a different move. This is a decent chart reset. So whatever may have happened before may no longer be as applicable, or it has certainly shifted the supply and demand dynamic. So it's just something to consider in terms of having a heavy bias one way or another on Monday morning. For me, it remains on watch for a gap up parabolic type of setup. So ideally, we open 18, 19, 20s, whatever it likes to do. But then if it speeds up at any point, then that creates a window of opportunity that I would like to take advantage of. But you can see the move overall, right? It's nothing to step in front of. It's, we're clearly above this 15, 16s area. We didn't even test VWAP one time on Friday, essentially after the 10 a.m. move. So it's, each resistance that has been previously, now it's trying to hold the support. So nothing to step in front of overall. The next one that I have on watch is PLTR, and PLTR is, to me, it's similar to IONQ. It's similar in terms of technical structure, in terms of technical opportunity for some of the trades in there. But similarly, I'd like to see some sort of a gap up parabolic into this 80s area. We had a nice strong close there on Friday, and then it just steady, slightly floated, higher after hours. So if we open up, 78, 70, 79s, whatever gap up into the 80s area, we can kind of see a similar opportunity of looking left into where some of these congestion zones are. So that will be on watch for next week, not just Monday, just throughout next week as well. And the next one that I have on watch is Tesla. So Tesla continues its march on, continues its consistent march of fresh highs every day. So nothing, again, this is Tesla. It definitely trades, at least for me, it trades a little different than your average ticker. We're, like I said, making new highs every day. So nothing to step in front of, but intraday, it does provide for, good opportunities, something either if you buy a flush out of the open, that's an easy, whatever, $10, $15 range right here. And then, or if you wait for some sort of key level to, find where you can risk something off of, such as the 430s here, where we, retested it. Then it also gave an opportunity on the backside for a little bit, right? Like I said, this is just the type of market that we're in. Nothing just seems to, fail all the way or continue strong all the way. It's a lot of back and forth, and it requires a little adjustment into what may be your normal way of trading. So Tesla will be on watch for gap up parabolic, maybe 450s. I mean, like I said, we're in a uncharted territory here, so there's no reason or point to guess where it's going to go. I treat it similarly to how we had the SMCI and Nvidia trade, way back when, during this period here in March, and then we had Nvidia more recently. So that essentially is the territory that we're entering with Tesla. So I wouldn't be surprised that 500-600 or not obviously not next week, but longer term. Again, if it's not one to step in front of. So gap up parabolic and look for some similar opportunities as Friday. And then the last one that I have on watch is this DXYZ. More so watching it along with Tesla. It's a thinner name, but what attracts me are these opportunities here that it's wide range, right? You have these $6 to $5 $5 to $6 pools and swipes back and forth. So that kind of what draws my attention, but it's not necessarily anything I'll trade with large size. It's more so just looking to take advantage of key opportunities and key levels. Now, what I am mainly watching with DXYZ is the day that it decouples from Tesla, and not that it's following it very closely, but obviously there's some sort of interaction there. So the day it decouples, similarly to how it was MSTR and BTC, right? The day they decoupled is when the opportunity essentially was at its peak. So that is what I'm following and trending along with DXYZ. And that pretty much it is for me, Chris.
Great. Yeah, a lot of really good thoughts there. I really agree. I'll get into my Tesla trade or my thought process on it a little bit more later on, but very, very similar. But the first name that I'll kind of start out with is MSTR. And you can see that this one's kind of just been range bound, it's been tightening up a little bit. Bitcoin has stayed pretty level around that 100K level. And I think that that's kind of an encouraging sign. Like we have some different things coming up over the next week with the Fed meeting and things like that, which might affect some more like macro views or asset allocation kind of things. But as long as Bitcoin's hanging around 100K and Masters is kind of tightening up around here, if Bitcoin does decide to have its next leg up, I could see a nice move happening in MSTR. And then on the same hand, if Bitcoin breaks down, then MSTR should follow behind pretty well. And you can just see a change of character from when it was like perma bid and like the options were going nuts on it, crazy implied volatility. And now you just kind of have a reset and you digest that move. And it is similar to when like SMCI and Nvidia were running really hard back in the day. You basically have these big trends, they go parabolic, and then they just need time to reset. And you can see it starting to build up a little bit now. So MSTR will be on watch mostly for calls or for the long side, possibly with an equity trade if Bitcoin gets bid. But if not, then it'll be hands off or possibly looking for some downside as well. The next one is actually Nvidia itself. Looks pretty weak. We talked a little bit about like these sector trades, these rotations, especially into the end of the year. And, throughout 2024, this has been, like one of the best trades that has kind of unfolded, 2023, 2024. And, going into 2025, all the people who did really well on Nvidia, all the fund managers and things like that, I doubt that they're going to go into 2025 with Nvidia being their best, newest, brightest idea that they're going to be kind of featuring. Whereas this has been a big mover that's already had a big move. And so it already played out. So I think that Nvidia could just get an unwind, and not so much from a fundamental point of view, although there are things going on with like China restrictions around like some of the AI chips that could interfere with some of their activities. But I really think it's just going to be a time of some profit taking, some consolidation. And I think that you're going to have a lot of other themes kind of pivot into that. I mean, you have certain companies and deals happening with Google, with the quantum computing. You have stuff with Broadcom, which is AVGO, and working with Apple. So you have some other things, some other themes and sectors really starting to get some more attention, and that can take away attention from Nvidia. And so again, if Nvidia trades at whatever multiple the market sees as a fair value, if you were to break down to where does that multiple come from? It comes from, the fundamental side. It also comes from the popularity side and the sector and the flavor of the day kind of side. So if that starts to kind of compress a little bit, even though the fundamentals are mostly the same, you can definitely have an unwind. So who knows? Maybe we break down, test, 120, or if the market pulls in or something, maybe test, 100 again at some point. But I'm watching this area up here to see if this really holds around this 130. And if that starts to break down, I think we could get a nice flush into the next couple of weeks. So that'll be on watch mostly for the downside for me. The next name is Tesla. So just like Stan brought up, I've had a view on Tesla for a while, especially since the election. And I think that, we're breaking out to new all-time highs, and the options on it are still pretty reasonably priced. But they're starting to pick up a lot. So I think it's possible we get into some kind of gamma run up at some point again, whether that's into the end of the year or at some point. But I also think that we can see 500 pretty soon. And, it does sound ridiculous, but if gamma run starts to kind of take over on it, it could happen within a week or two. So it's before the end of the year, I could see us having a big run up into that. And then this upcoming week is the big options expiration. So if we had some kind of crazy parabolic, going towards 500, maybe not quite there, but maybe 450, 480 or something. Everyone thinks it's going to 500. And then you have that big options expiration. You might be able to have a nice flush back down to, who knows, the 420 levels or something if it gets to 460, 470. So Tesla will be on watch. Kind of on a bullish side for the first part of the week. And then I think later on in the week, it could flip towards more mean reversion. And a lot of this is going to depend on the FOMC meeting next week as well to see kind of how that impacts the market. The next name, SMCI. So, this has been a roller coaster all year. You had the news, you had the accounting stuff. Basically, you had the lowest lows down here when it looked like it was going to get delisted and everything was going on. And then they found another auditor, had a big run up, went parabolic again, running into a big daily level. And now it's just kind of if it has an auditor, if it still has some problems, it's just kind of a regular name again. And so it's going to trend with the chip sector, with the AI sector. And then, we'll kind of see what happens. But I think that we're starting to see some of its reality starting to impact. And again, just like NVIDIA, I doubt that going into 2025, this is going to be someone's best idea. So you could just have some attention go elsewhere, and SMCI just kind of gets left to, maybe fade down a little bit and then just consolidate for a few months. So SMCI, I think, could have a nice flush in its future. But again, very news dependent on this name. So I'll be on watch mostly for puts. And then SMR. So again, talking about that sector rotation. So this is actually a great analogy to kind of how IONQ can play out. So if you look at IONQ's chart, it actually has a very similar concept where it's you have this variance, you have these kind of trend lines you could draw underneath to define a trend. And what is a trend? It's basically over a period of time, a series of lows and highs forming, and that's what a trend is. This is something that is a normal activity for it. And if you were to draw these trend lines underneath here, once it, two things tend to happen. It either goes parabolic up and, breaks the trend lines up here. And that's kind of the blowout, and then it resets. Or you can have kind of a failed to follow through where it starts to fail underneath that trend line. Now that trend line starts to act as resistance. And so SMR is a really nice example of that playing out. And it's how IONQ could potentially play out if it continues to stay heavy. But, another thing that could happen is if it just kind of consolidates and then starts to march up into a new trend, it could be like something over here or something over here where, you have these big dips and then it starts to reclaim and form a new trend. So SMR, kind of the nuclear theme, this and this and OKLO are, you can see the money pivoting away from some of those themes and into something else, like maybe more of the quantum computing, or maybe something else, or new trends are going to be forming as well. But, this was a really hot trend for especially the later half of 2024. And you can just kind of see how that is starting to, adjust. This is not looking like a super defined, bullish trend anymore. This looks like you had a lot of people think it was a great idea. A lot of people piled in at higher prices. And now, unless you have new news or something, you could just have a lot of people sitting in here. And if it's not doing anything, they could bail out, and that could cause a nice flush back to, where some of these moves came from. So those were the main ones that I want to touch on. And PLTR, this is, we can talk about this another time, but very similar kind of concepts where, maybe it goes parabolic for a while and resets, and then maybe eventually has that failed follow through underneath it. So those are really the main ideas that I wanted to touch on for this week. And we'll see, especially with the FOMC meeting coming up and the new year, we're going to see a lot of new trends forming. So sometimes it's about coming to the market really prepared, and sometimes it's coming to the market really observant. And I think that the next couple of weeks are going to be a time to really be observant and to be able to talk with other traders and notice new trends, and then to basically pick your spots from there. So those are the main things that I had on watch. So Stan, any comments on any of those?
Yeah, I think they're a fantastic watches list, Chris. It's something that, I agree with a lot of the, I agree with the sentiment around the AI names, right? The NVIDIA, SMCI. It feels like we're in this maybe, topping area, maybe some of that distribution area, to where now as the hype, as the excitement is shifting into something else, or as at least the hype is subsiding a little bit, then people may be looking into their portfolios and saying, okay, do I really need that much of all of that, right? So which may bring some pressure overall. I think that OKLO chart that you showed, it we've seen it before as well. You have this run up, then you have this distribution area over a few months, and then it's just this unwind. So great, I think great thoughts, and overall for me, going into the year end, we'll be just watching size, watching liquidity, watching the range, and don't ruin a year worth of work in the last 2 weeks, essentially is the goal.
Yeah, no, 100%. I mean, from both like a tax perspective and from a account protecting, perspective, these last couple of weeks, it's more the time to, plan and protect and to find new things, as opposed to, I've done well all year and now I'm just going to like really try to hit that home run. And it's like, you mess something up that you've been building for a long time. So I totally agree with that. So Stan, thank you very much for coming on Scan again. And then I will see you in the room. And then, again, a big welcome to all the people who have been joining Investors Underground recently. Stan has had some really great onboarding initiatives to help people get integrated into the community and to, learn the lingo and learn the setups and just feel comfortable with all the tools. So it's been going really well. And if anyone wants to join, it's always a great time to hang out Investors Underground. So thank you, Stan, and I'll see you in the room this week.
Absolutely. Thank you, Chris. Have a great day.
You too. Thank you, everyone, for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.